is there any indication that this trade war is going to come to a close anytime in the year 2019?
No, there isn't. I think talks will continue, but neither side seems to be in a particular hurry to resolve this before the end of this year. Our hope is that sometime in the first half of next year, a deal can be struck. I think they were close back in May, but for a variety of reasons, the talks fell apart. And it still feels like things are getting worse and maybe have to get a little bit worse again before the two sides start really negotiating seriously to resolve this.
How much worse do you think they can get, Michael?
Oh, well, I mean, President Trump campaigned on a 45% tariff on all things imported from China, so he's a long way from that. And the Chinese haven't really started to name American companies on their equivalent to the U.S. entities list. So it could get worse. There's a lot of dimensions in which just the economic relationship between China and the U.S. could deteriorate further. Our base case is that things will be sort of stable over the next few months. We'll get that tariff increase in September, and we'll get, I think, a bit more of a Chinese response to that. But as I said, our hope is really, and it's still a hope, is that by, say, end of the first quarter, early second quarter next year, well before the elections, I think both sides by then will find it in their interest to come together and resolve this.
If those tariffs hit on September 1st, do you cut again U.S. or global growth forecasts, or are the cuts already priced in on the assumption that the tariffs will kick in?
Well, certainly our base case for the U.S. and global economy for this year and into next year had made an allowance for something like this 10% tariff that will take effect on September 1st. So we have not revised our forecasts, and we're not inclined to change our view of the world when that happens. I guess it would be fair to say anything beyond that, if later this year there's another round of tariff increases, another round of this counter-punch that we've had for the last sort of 15 months or so, then we would have to start thinking about shaving U.S. growth maybe a little bit more. It still feels a long way from something that's going to tip the U.S. economy into recession, but we're certainly moving in that direction. The longer this sort of tit-for-tat trade war continues, the more business uncertainty there will be, the weaker capex will be in the United States, and that, as you know, shrank already in the second quarter. So the logic of this trade war is that everybody is impoverished by it, and growth will get weaker and weaker and weaker until it's resolved, which is why we still think that it will get resolved, certainly before the U.S. elections.
If we get it resolved, if we get a resolution, then does all of that just wash away? Do we ratchet back up the growth estimates, or has the damage been done, Michael?
I guess it depends partly on what the resolution looks like. As you know, the Chinese are asking for all U.S. tariffs to be removed on day one. I don't think that's very likely. I think it's more likely to be a phased withdrawal of tariffs in response to Chinese delivery on certain objectives that the U.S. has in these negotiations. But certainly, I think a lot of the uncertainty, the fear that things could get worse, that will lift. I think markets will get a very powerful boost, and I think that will be very positive for growth. So in a sense, yes, I think on a clear resolution, I think growth expectations will start to brighten for, say, the second half of next year and into 2021. But we, and I think I would expect everybody else, are reluctant to price that increase in growth expectations in until we're a lot more confident that our assumption that there is a deal actually is going to be correct.
Can the U.S. Federal Reserve, quote, save the global markets if the trade war drags on?
I don't think it can, no. I mean, if this escalation pattern continues, the Fed could take up rates all the way to zero. Certainly, I think the global economy would slow down considerably, at least outside China. The Chinese policy hasn't really responded. Certainly, monetary policy hasn't responded yet. So there's a fair bit the PBOC can do to try to insulate their economy from this. But for the U.S. and Europe, this escalating trade war, and especially if it does broaden out to include Europe as well, as you know, President Trump has talked about introducing tariffs on European automobile exports to the U.S. So that kind of continued escalation of the Chinese trade war, a broadening out to include Europe, that could very well mean recession for the U.S. and European economies, even with Fed funds at 0.